We've got the management of IndiaMART waiting to chat with us. The company reported their numbers about a month back, but we didn't quite get chatting with them at that time. There were two key sources of disappointment when the company reported their September quarter numbers. One was the customer addition was at a multi-quarter low. Typically, the company wants to add about 6,000 to 8,000 paying subscribers every quarter. But this quarter, they added only 2,000 paying subscribers. And secondly, was margins also declined by about 80 basis points on a year-on-year basis. Dinesh Agarwal, founder and chief executive officer at IndiaMART InterMESH, is with us on the show now. Dinesh, morning. This is Reema here. First, can you talk about the paying subscriber? I know you've explained that there was you had taken some price hikes, as a result of which there was a little bit of churn, which led to the drop in the paying subscriber addition. But what has been the picture so far in October and November? When do you think you'll be able to get back to your previous trajectory of adding 6,000 to 8,000 paying subscribers every quarter?
Thank you, Reema. As I explained on the earnings calls also, that we had taken the price hike and that is denting some of the gross addition, as well as last year we added too many customers, and the expectation of early churn from the silver monthly and silver annual customer has been above our estimates, and that is why it is being at a multi-quarter low. I think it will take another quarter or two before we can come back with a clear guidance on the net customer addition. Having said that, I think we have accumulated a good number of customers in the last 18 months or so, and today we are our gold and platinum customer base accounts for almost 75% of revenue and about 50% of the customer base. So we are confident that we will continue to have a decent growth in the coming quarters on the collections as well as on the revenue.
So Dinesh, just a quick follow-up. One, is the churn in subscribers in the current quarter, October and November, similar to what we had seen in the prior quarter, or has it picked up or reduced? And on a quarter-on-quarter basis in Q3, do you think your number of paying subscribers will be more than 2,000, what you did in Q2?
As I said, it is difficult to comment at this point of time. But
directionally?
Directionally, I think we will be at least doing 2,000 for sure. Whether better or not, that we will know in the month of January for sure.
Hi, Mr. Agarwal. Good morning. Nigel on this side, and good to speak to you again. Well, if things are going to look up from here, I'm looking at a couple of brokerage notes, and they are still expecting 15,000 subscriber addition for this year. That would mean you have to replicate what you did in the first half of the year, which is around 7,000 subscriber addition. Do you think that's possible? What you did in the first half, you can do in the second half? Point number one. And point number two is there any kind of rollback that you're thinking of? If subscriber addition is not happening, will you look at rolling back? And in that sense, it will affect the average revenue per customer? Or do you want to stick to those price hikes and continue with regard to this 2,000-3,000 subscriber addition?
So I think, as I said earlier, we are not contemplating any rolling back of the prices, because these prices were there pre-COVID, and I think we will stick to that. On the customer addition, as I said, we will take a quarter or two before I can give you a clear guidance on that. We have, as said earlier, we will continue to eye for upwards of 5,000, maybe next year, every quarter.
Okay, all right. So we get that. In the next 2 quarters, not so much clarity, but hopefully from FY25 onwards, it will go back to that addition of close to around 5,000 per quarter. Mr. Agarwal, when you joined us last a couple of months or so ago, I was egging you on to give us a guidance on margins. And you said it could possibly head towards 30% by the end of this fiscal. What is the band? And do you think that 30% is possible by the end of this fiscal?
Yes, margins are always guided on the standalone basis for our company, because the rest of the money is invested into startups and newer initiatives. So on the standalone basis, I think I'm continuing to be committing about 30%, plus minus 1 or 2% here and there.
Okay. So, I just wanted to understand from you overall, right? What is the overarching growth that you're looking at? The FY23 revenue growth that you did was a solid 30% plus. What do you think you can do by the end of FY24 and 25?
FY24, it is already looking good. because if you look at the collection from customers, we are continuing to do about upwards of 25% collection from customers, and so is the revenue is also growing at about 22%. So I think we will continue to build on the momentum. Quarter 4 is seasonally high on the collection side. So I think we are in line with our projections.
Okay, and also on the margins, I just wanted to understand by the end of FY24, what kind of margins are you looking at? I think you're sitting at an exit margin of 27%, but you have done better in the past. You've done about 28.5% as well. So do you see a little bit of this margin pressure continue in the second half of the year?
As I said, please check the margin on the standalone basis. On the standalone basis, we are doing better than 28%, and I think we'll continue to improve on that for sure.
Can you talk about acquisitions, the investments? On a standalone basis, we agree your margins are closer to 30%, but the consolidated margins are also getting impacted due to the investments and the acquisitions like Busy, etc., that you've done. And some of them have also reported some losses. So on a consolidated basis, can you talk about the factors which could impact your margins?
On a consolidated basis, I think we are in the investment mode. Busy has been doing wonderfully well. The revenue have grown at 24%, and even we don't consider much about EBITDA of 1 or 2 crores here and there. But since we are generating a lot of cash, I think we will continue to invest in various initiatives, new initiatives, and they may have different margin trajectories going forward.
Okay. Your cash in books, I think, is around 1900 crore?
Yes, sir.
Because you have used up, I think, 500 crores for the buyback. So
Yes.
Are we looking at some more inorganic growth, say, in this fiscal itself? And any other utilization of the money? You've already done the buyback. So any other methods? I mean, your shareholders will be interested, right?
So if you see the deferred revenue and customer advances stand at around 1250 odd crores. So that is the money that we have to keep in the books for sure. Rest of the money, we continue to look for any investment opportunities. Anything that comes up, we will let you know. Nothing as of now on the cards.
Okay, all right. All the best for the second half of the year. Thanks a lot for joining in. That is IndiaMART. Stock has been under pressure, actually. The customer addition is at a multi-quarter low. So that's really put pressure on the business as well as on the stock. Let's dip into